Gil, you're smiling. Is that because you just looked through this report?
Yeah, the AWS result is nothing short of remarkable. It's not surprising because we got the good news from Google Cloud last week and from Microsoft Azure last night. But this business is now at $170 billion a year run rate. To be growing 37% from 28% last quarter is an incredible acceleration. And that 25 billion of AI revenue, that's real. When we talk about are these companies getting a good return? Yeah, $25 billion of annualized revenue at probably 35% margin. That's a very good return on that CapEx. Now, I didn't see CapEx guidance in the release, but assuming they don't give us too scary of a number on the call, I would expect Amazon to hold on to these gains.
Well, yeah, I mean, that was the first thing that I did Control F4, sort of looking for that, trying to figure out whether they were actually going to mention it. And I guess that will be the bugaboo. But I am curious, when you look at the products that they have being developed, the ones they already have there that they're trying to grow, and they go through this one by one through the release, is there any sort of way you would actually bet against them finding a way to capitalize on that CapEx?
Right now, they're doing a very good job of capitalizing on it because they're not just offering the AI compute, they're offering their customers all the software that comes on top of that, the control plane and the orchestration layer and the harnesses and all the software that you need, because buying an Anthropic model is not enough anymore. You need to make it work for your business. And Amazon, just like Microsoft yesterday, is doing a very good job of selling their customers that product set. They don't have to have the frontier model, but if they help their customers, their business customers, use the frontier models well, they're adding value and they're capturing the value in their results right now.
Amazon free cash flow falling to an outflow of $7.6 billion trailing 12 months. What do you make of that?
That had they reported a week ago and Google reported today, they'd be getting punished for that. But the market had a week to digest the fact that Amazon will have negative free cash flow. And so that was already in the stock. People understood that that's where they were headed. And so there's less of a concern about that. There's an understanding that Google, Amazon, and Meta will be cash flow negative. The standout is actually Microsoft that said they will remain cash flow positive, which is why they got rewarded even more handsomely today in the market.
I am wondering also what you make of just how the company is going to be able to compete for cloud customers going forward in an environment where they're not the only, leader in cloud and AI going forward.
Well, that was about a year ago. We were worried about that. We were worried about Microsoft and Google running away with it. But AWS's 37% growth is actually as impressive, if not more impressive, than the growth at Google and Microsoft, because it's on a much bigger scale. They're the leader, they're the incumbent. A year ago, they hadn't found their footing. The key to Amazon, just like the key to Google's growth last week, the key to Amazon is that Anthropic is such a big customer. Amazon is providing most of Anthropic's compute, and that huge ramp in Anthropic results this year is flowing through Amazon Web Services. That's why they have this accelerating growth, because they were wise enough to invest in Anthropic early on and secure that Anthropic used their compute.
Gil, before we let you go, I do just have to get your thoughts. We are still awaiting the earnings later this hour from Apple. Obviously, a much different AI story, if you will. But when you start to think about the strategy that they've taken so far under Tim Cook and about a month's time under John Ternus, give me a sense here as to where they fit in your view, in this AI race.
Well, they have it figured out. The reason Apple is trading at such a premium to all the other mega caps is because they decided they're going to stay above the fray. They're going to let others figure out what technology wins, which frontier model, how it's going to be used. They're going to continue to provide access to any of those models through their system without having to invest these hundreds of billions of dollars to build out the infrastructure. They're going to let other people do that, fight it out, and then eventually we're going to be using whatever the best model is through our Apple devices, our iPhones and Macs. That has turned out to be a fantastically good strategy, especially because it makes investors feel like, I don't need to know the answer to which model is the best. I'm going to be using it through Apple anyway. That's why Apple is trading at such a nice premium to all the other mega caps.